reverse mortgages and retirement, synonymous now for the people in the know.
Yes.
Which is what we do here on Smarter San Diego. We bring people out of the know and into the know. So Kathy, thank you for being here today.
Thanks for having me.
Kathy Collins with UMAX Mortgage here, reverse mortgage specialist. So here's the thing. You know, I recently had an encounter with a recent retiree, and just kind of going over her budget. Okay, what are we looking at? What's the outlay? What's the Social Security income look like? And how do we make this as comfortable as possible? Okay, so I'll just lay out a quick scenario for you, and this is why you have to look at this, especially if things look tight in retirement. So the first one was easy. 2 cars, one's paid off, one's not. Get rid of the one that's not, right? So there's $300 a month. And for someone who's on $1,100 a month, Social Security, that's a big chunk.
It makes a huge difference. Yeah.
The other payment was the house payment. $500 a month on that one. Obviously not here in California. $500 a month on that one. Immediately, I'm looking at that going, well, you might still be able to make it with that. But if you get a reverse mortgage, even if you don't get anything out of it, even if you just do the credit line, now that's gone too. So, so now we go from $800 a month in the main expenses, we're looking at housing and cars, always the 2 main expenses, to 0. For someone who's on $1,100 a month, that's a big deal. So that's why we're talking about this today. A reverse mortgage is part of your retirement plan. And for those of you who are younger, like my age, I'm 37, or if you're 45 or whatever, your parents need to hear this, because the hardest part, in my opinion, about the reverse mortgage is that it sounds complicated, especially if you are 70 or 80 years old and you don't have a financial background. I mean, you worked hard your whole life. You don't know what a difference between a stock and a bond, you know what I mean?
Yeah.
Or what government insurance is. So, and especially right now, Kathy, and we're going to talk about how it works. Okay, you're here to give us the how does it work, right? And I'm here to tell you that with prices being this high, it is a great opportunity, because the higher home values are, the more advantageous your reverse mortgage is. What's up, James? He says, since we're having the conversation, we must be nearing the top. Well, what conversation? What conversation are we having? We're having a conversation, I mean, nearing the top, okay. Reverse mortgages, part of the retirement plan? No, because it doesn't matter if you're whether we're at the top or we're at the bottom of the market. And I appreciate your comment, James. The reverse mortgage could still make sense, because a lot of people own their home free and clear. So it really doesn't make that big a difference to that person. They might get, if they're doing the withdrawals, they might get $800 a month instead of $1,100. Okay. Or, you know, they may go from a certain amount built up in credit line to a different one. You know, it's not a huge difference maker on what you get from the reverse mortgage, but what you can get out of the reverse mortgage as far as reducing or eliminating your payment. That's what's huge. So, Kathy, tell us, you've been doing reverse mortgages how long now?
For about 10 years.
10 years.
Yep.
So they've changed a lot in the last 10 years.
They have.
For the better.
They've changed a lot. In as recently as October. So there have been some even very, very recent changes. So yes, they have changed a lot and evolved a lot over the years and become better, really. Those changes have all been things to be better for the consumer, to provide a better access, smarter use of the loan, and so the changes have been good since I've been in the industry.
Smarter use of the loan. It's a government insured product.
Yes.
You know, it's an FHA product.
Right.
And James, by the way, I do agree with you. We're nearing the top. Let me just make that clear. But it doesn't matter for this conversation.
It doesn't matter for this conversation. It doesn't matter for this loan. In fact, if we are nearing the top, there are some very compelling reasons to take a look at it now as it's nearing the top, because once you're in, there is an ability to go deeper into the equity that's established at the time the appraisal is done. So let's just say the top of the market is 2018. All your future use of the money is based on your appraisal in 2018. There's no reassessment of it, and that's one of the great things about it, is that you establish value and you know what you've got for the life of the loan, and that can come in many forms. It can mean that you're eliminating the mortgage, like you were just talking about. It can mean accessing some of the wealth that people have in their properties, because here in San Diego, the market has been good. It's been great since it's recovered from the crash that happened. And so people are building a lot of wealth in their properties. And sometimes they don't have other wealth to tap into in retirement, or they have some wealth, but it's not enough. Like you were talking about, the budget is not, the budget is bigger than what's available in terms of cash flow. So the wealth in the property is a perfect place for them to look for a way to live more comfortably, or sometimes just to really be able to sustain retirement living, period, here in San Diego.
Yeah, and and that's the reason why we're talking about this today. And I will say, this is my PSA today is this. For reverse mortgages, when values are high, as James alluded to, we must be nearing the top. That's not, we must be nearing the top. I think we are near the top. But regardless, when that's the case, or if you think that's the case, that's the time to maximize reverse mortgage, because there are two things that are main factors in this: age and then loan to value, which has to do with how much you owe versus what the property is worth. So if the properties are worth more, then you're in a position to get essentially better terms on the reverse mortgage.
Right. Or access to more money.
Or access to more money.
Yep.
He says, what if you lose the equity you refi the reverse on? So it doesn't matter. So that's exactly what Kathy was just saying. Thank you for asking that question, James. So when you do the reverse mortgage, you lock in the appraised value. This is why it's important when values are high, ideally, to execute your reverse mortgage then. Yeah. Because if your home appraises for $1 million today, and you do your reverse mortgage today, and 5 years from now it's worth $600,000, it doesn't matter to the reverse mortgage. Is that right?
Correct. It doesn't affect the amount that you've borrowed. It doesn't affect the amount that you have access to. If you've established a line of credit, which is one way you can use the reverse mortgage, is to establish a line of credit that you can use as needed or not at all. You can just establish that line of credit. If you end up not needing it or just needing a very small portion, it remains equity in the property, and so that's correct.
Technically, this is through FHA. This is sort of an insurance product.
Yes.
I have sort of told people about reverse mortgages as insurance. You mentioned the credit line, and that's the one that I'm talking about. So, for example, James, let's say you're 62 years old, you have the $1 million property, you owe $500,000 on it. Okay, but you just bought it a few years ago, but now it's worth $1 million. You go and you get a reverse mortgage. You go ahead and lock it in. Do the credit line, meaning you're not taking any money out. You're not taking any equity out. So literally your only cost is the transactional cost. Let's say that's $3,000 or something, $3,000 to $4,000. So your escrow, title, blah, 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 you go through all that. Let's say it's $3 or $4 grand. You're spending that $3 or $4 grand to lock in your value for the reverse mortgage, which you can then amend later into different ways, right? If you want.
Well, and you're locking in access to that line of credit. So if you own free and clear and you end up having a line of credit of $200,000, $300,000, $400,000, you have access to that money then for as long as you live in the property. So the life of the loan is defined by living in the property, and it's in place until you live in the property.
And we are giving rudimentary examples here, and this isn't exact math, so conceptually stay with us.
Right.
But essentially, that same example, $1 million property, owe $500,000. Let's say I qualify for a credit line of $300 grand right off the bat. Isn't it also true that that credit line grows over time as well?
Well, you have access to more of that credit line over time. So the growth, yes, it does grow. It's kind of like when you open a credit card and you start out and they say, okay, we're going to give you a $500 balance to begin with, and then you pay on your credit card and you have it a year and you get a letter and they say, oh, we're going to now give you access to $1,000 of credit. So you're able to borrow deeper into the value of the property that was established at the time the appraisal was made on the loan. So it's growing, you're not earning interest. I want to make sure that that's clear. That can be a little confusing. So it's not interest bearing, it is the ability to go deeper into and borrow more credit over time. So yes, it does grow. Your credit line grows. Your ability to borrow grows. That's right.
And that increases in a compounding fashion as well.
Correct.
So if I start off with, and there's a certain rate attached to that, so if I start off with $300,000 and it's growing at 5-6%,
right?
Okay. Then the first year goes up 5% of 300,000.
That's right.
The next year it goes up 5% of the first year's 300,000 times the 5%, right?
Right.
Increase. So it compounds
the
amount. So the reason why it's worth locking it in when prices are high, and you can get that credit line going, even if you're not sure if you're going to use it or not.
Right.
And why I call it insurance, that $3,000 or $4,000 could buy you hundreds and hundreds of thousands of dollars in access to your equity without having to sell your home, without having to qualify for refinance, because that's one of the things we see, especially with seniors who are, let's say, 75, 80 years old. Now they have very little income. It's difficult for them to qualify for a cash out refinance because they have to be able to pay that back. Whereas with this, there's no paying it back.
Right. Well, it is paid back. It is paid back in the form of interest. So interest is charged on the loan,
but not on a monthly basis out of your cash flow.
That's right. You're not writing a check for it every month. We know when we have a mortgage and we're writing a check every month, that's coming out of your checking account. The interest for the reverse mortgage is added onto the principal balance. So the interest is paid at the end of the loan versus being paid monthly like it is on a traditional, for what we call a forward mortgage, just a traditional mortgage.
Right.
So it is paid. It's just not paid till the end. The other thing that people have the option to do too is to pay it during the course of the loan. So if they have it, or if they have a small payment they want to make, they can do that. They can treat it sort of like an interest-only loan, just write a check for that interest amount that's charged each month. They can pay a portion of that. They can pay it when they have money coming in. I have clients who still work, but they're in maybe a commission-based business like real estate. When they get a commission check, they give part of that to paying down the interest. They keep the rest of it for living expenses. So it's very flexible. And that's another great thing about it, is that there is flexibility. There's flexibility to pay if you want, not pay if you're not able or can't or don't desire to. So there's great flexibility with the product.
And it's the type of product that if you understand, you can use to your advantage in a major, major way.
Yeah.
And that's why I encourage everyone, don't get a reverse mortgage if you don't understand it.
Right.
But understand it.
Yeah.
Take the time to understand what it is and what the option is that it provides and the options that it provides. And what you'll find is that really smart financial guys, like if you talk to a hedge fund manager or something like that, they'll be like, as soon as I'm 62, I'm getting a reverse mortgage. They're just like, this is insane. Yeah. But it's one of those things that's allowed, and a lot of it came from what I was just talking about, the position you get stuck in when you get older and you get on a fixed income and you have a paid off home. You can't really do anything with it. Because your only option is to otherwise your option is to refinance, pull money out, which you have to pay back every month, out of your cash flow, which you have very little of, or sell the house. Yeah. So, and those were your only two options prior to reverse mortgage being an option.
Right.
And that's the reason why I want to bring this up today. With values being high, a great time to lock it in, whether you're doing, the monthly payment option, whether you're doing the credit line option, whatever, or the cash up front option, max it out, you can do that too, right? So you can essentially take the cash out, but then you just don't have to make payments.
Right.
Which is also really good if you do need the money versus doing a cash out refinance.
Yeah.
Do that, then you don't have to make payments, so you can still live comfortably in retirement.
Right. Some of my clients are taking some of the cash out to gift their money now. So that's one thing that comes up a lot, is what's going to be left for the children, what's going to be left for the grandchildren. I have a client that I'm working with in LA right now who is taking the money out now to fund her 17-year-old grandchild's education for the next 4 years. So she's gifting it now while she's alive. They're going to both enjoy the fact that she's funding that education, and she's going to be there to enjoy the gift that she's giving her granddaughter. So
that's awesome.
So there's a lot of different ways that people use these, and everyone's situation is unique. I really find that it is really important to understand it. I'm so glad that you brought that up. It's important for people to understand their mortgage period. I encounter a lot of people that say, just tell me what is the best thing to do, or lay it out for me. I really don't ever get that involved in my mortgage and what those decisions should be. And everyone should understand their mortgage that they have, whether it's reverse or otherwise. So understanding it is really important, and understanding and telling your story of what you want to do and what your dreams and goals are, and how you'd like to use that wealth that you've worked your whole life to have in your property. How would you like to use that? How would you like to leave it to your heirs? How would you like to enjoy it now? What combination of both of those things do you want to try to accomplish? And then we try to build something around that does accomplish both of those goals, or all of the goals that you have for your wealth. Yeah,
it's one of those things. It's a very flexible, unique financial tool that exists in the marketplace for people who own their homes. It doesn't have to be free and clear. You just have to have a certain amount of equity, which is based on a formula that has to do with your age. So age and equity are the two factors that determine what kind of options you have in a reverse mortgage. Yep. I would encourage this. It's an advantage of being old. The older you are, the deeper you can go in the equity. So it's one of those advantages of aging. Yes, one of the advantages. And how it works with property heirs is the same, right, as a normal mortgage. A lot of people don't think that it's different somehow. Right. So I wanted to clear that up, you know, for people who are saying, well, if I get a reverse mortgage, what happens when I die? Does the bank take my home?
Right.
And it's not just the same, right?
Right. There is a common myth that the bank takes title to the property. There was a really old product, I believe in the 1960s, a very, very, very old product, where there may have been some kind of an arrangement like that with the bank. The products today are a lien on property like any other lien. So it's just, if you have a mortgage today, it's just like your mortgage today. If you went to sell, you would need to pay off that mortgage. Same thing happens with the reverse mortgage. When you go to sell or when you pass away, that debt needs to be satisfied, and the remaining equity would go to you if you're still living, or it would go to the heirs of your estate. So yeah, it works just like any other debt that you would have or lien that you have on the property. The bank is not entitled to anything other than the interest that is earned during the time of the loan.
Perfect.
So, yeah.
That's awesome, Kathy. Thank you so much for coming in today and helping us dispel some of these myths. And here's the thing. So when it comes to a reverse mortgage, make sure that you understand it. Don't just run around and get a reverse mortgage or call some 800 number and talk to someone so far away. Talk to someone local, someone that you can meet with for coffee if you want to, like Kathy here in San Diego, and understand it. Learn about it a little bit. This is a big deal. If you're going to do something like this, do it, but be smart. Do it the right way. Make sure that it's accomplishing your goals. And you can call Kathy and she'll go over everything with you. If you or someone that you know has questions, someone in your family, whether it's mom, dad, grandpa, grandma, this is an incredible financial product. I've encouraged my family members to look at this very closely. In fact, several of them I've encouraged to do it without question, based on what I know about what they're trying to accomplish. So look into it, check it out, and we have more coming up today on Smarter San Diego. Right here, I'm going to talk about all kinds of things. Trump tax cuts, California gas tax, cryptocurrency update, all that's coming up next. Stick around.